Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of ChargePoint, ticker symbol CHPT. And so here I am recording this on Tuesday, December 3rd, after the market has closed, and ChargePoint closed at a price of $1.16, being down about 2.5% on the day. And so, yeah, I wanted to go over the chart here real quick before they have their earnings call tomorrow, December 4th, after close. That is going to be at around 4:30 Eastern. And so I will be hosting a little streaming party of their earnings call that'll probably be starting about 15 minutes before that. So tune in around 4:15 Eastern if you'd like to join and to listen in to their earnings call. But yeah, so I just wanted to go over some of the levels. I did go over them during Sunday night's Ticker Request Live, which tends to be every Sunday at 9 p.m. Eastern. So if you have some ticker requests, make sure you join for that. But so during that stream, I went over some levels that I think are pretty important. One of them being to the downside, that is $1.08. That was the low that was hit on November 13th. And as you can see here, we did consolidate above that level, tested it on the 19th, hitting a low of 113, and then actually breaking below it on November 21st, hitting a low of $1.05, but not getting any closes below 108. So I think that is a pretty important level for us to be holding, especially if we do go down leading up to or following earnings. Let's not get any closes below 108. But, if we do, there is this downtrend here. It's actually the bottom portion of a parallel channel. I'll take a step back in a minute so we can look at that. But it is quite possible that we do break below and form lower lows. But, if we do go to the upside, what are some levels that I would be paying attention to? One is this yellow line, which is actually a trend line, and that is right around, it looks like the high from the second was at a price of $1.24. So maybe that yellow line's right around $1.25. And that also looks like it coincides with the upper portion of that parallel channel. So there may be some very notable resistance right around 124 to 125. So do keep an eye out for that. If we are wicking up to that level, but closing below, that does suggest a rejection. But what we see with today's candle, this is like more or less like a spinning top with a wick to the top side and the bottom side, but actually the bottom side wick or the tail of that candle looking a little bit longer than the top side, so that does suggest that buyers have been stepping in to hold this up. However, like I had mentioned, going down 2.5% on the day, closing red, also gapping down from yesterday's close. There is now this gap here going up to 119. So maybe that gets filled, but maybe that is a level of resistance. So keep that in mind as well. And then another level to the upside is going to be $1.27. That was the high that was hit on November 25th. And so, haven't gotten any closes above that level, with the highest close in this range being at a price of $1.25. So again, that being a very notable level with the convergence of these two lines, as well as that prior higher close at 125. But if I do take a step back, we can see some things that may stand out. One is going to be the 3 pivot points for this parallel channel, one of them being the high that was hit on September 18th, the other one being the high that was hit on October 7th, and the lower pivot point was the low from October 2nd. So if you want to draw that parallel channel on your chart, you can, just to keep an eye on it. But it does look like, aside from those 3 pivot points, we did get rejected from the top side over here on November 5th. We did consolidate just above that, the bottom portion of that parallel channel, really between November 8th as well as when we hit that low of 105 on November 21st. And it does look like we effectively got rejected from the top of that channel on the 25th when we hit that high of 127. And then also, if I do take an even further step back, we can see where that yellow line originates from. And so that is actually, a trend line, even though it does look fairly horizontal. That is based on the low from April 22nd of this year, as well as the low from September 10th. And so that is how I get that line. And actually, the lows from those dates from April 22nd, that was 121, whereas the low from September 10th was 123. And we have, broken below that. So, again, very notable resistance just above our heads. But then if we do break above that, if we do go higher, it does look like there is this uptrend here based also upon the low from April 22nd, but also the low from June 25th, which was at 128. We broke below that over here and then effectively, kind of got a retest, almost getting to that level on November 5th when we did get rejected from that parallel channel as well as from below that red line. Just above that, we've got 153 here marked in orange, and then a gap fill at 169. So, it would be great if following earnings, we did launch up to that level to fill that gap. But it is quite possible, since we are still in this downtrending channel, that we head lower following earnings. But, I think that could be a great, dip buying opportunity. And a big reason for that is because I think that the new administration will be very friendly for, not just Tesla, but other EV charging station companies like ChargePoint, building up that infrastructure for the US. And, the saying is that a rising tide lifts all boats. And so if Tesla is going to be rising because of the new administration, because of the DOGE, the Department of Government Efficiency, I think that we'll actually see a lot of great pushes forward with not just Tesla, but other companies in that area, building up the infrastructure in the country for EVs and charging them. And so I think that ChargePoint could get a great benefit from the incoming administration. I think that we could see a lot of progress in the direction of EVs. So I think that's great. And if we really do start to take off, if we really have put in the bottom here at 105, I do have this purple uptrend, which was effectively the neckline of this head and shoulders pattern over here, going back to, let's see, January, the end of January of this year. We did get rejected from that level here as well as here, got, fake out break above it over here before consolidating below it and breaking down. And so I do think that if we are able to fill this gap at 169, we could potentially be getting up to this trend line. Maybe that would be right around 250 into next year, right around February, right around Valentine's Day. So maybe we are going up there. But one other thing I did want to point out before closing out this video is, there is one thing about this chart that I think it's like, always trying to time or predict the bottom. What has that done for us? It has really just led to the stock forming lower lows, breaking to new all-time low here on November 21st of 105. And so we haven't really seen anything just yet to suggest that the bottom is in fact in, that we are breaking from this downtrend and, this progression of, while we were putting in higher lows over here, we have now been putting in lower lows, continuing this trend. And so we haven't seen anything that suggests that we have broken from that. And so maybe we see that following earnings tomorrow on the 4th. Maybe we see a breakout from this downtrending channel. Maybe we see a close above 125 or 127. And maybe we start to head towards 150, maybe get into some resistance around there before filling this gap at 169 and moving into the twos and beyond. So, I think that 2025 could be a great, great year for the company, for EV charging station companies across the board. But, it could also be some more pain before we get there. So, I would not be surprised if this did break below $1 a share, considering that we were testing, just 5 cents above it. and then residing below $1 a share for some time, which might require a reverse split in order for ChargePoint to maintain compliance with the NASDAQ where they are listed. And so, yeah, I mean, there might be some more pain, but, $1 isn't too far from where we're currently at. So it's not a big drop down to that level. But, I would just, and I am preparing for that worst case scenario of getting to $1 a share, if not lower. But I am also set. I am happy if we do launch following earnings. That's what I'm hoping for, but I'm preparing for the worst. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and I'll see you tomorrow during their earnings call. Take care.